On behalf of the school counseling department, thank you so much for coming tonight. Jim Anderson was here last year, and he's back by popular demand. Jim is the Director of Financial Aid at Montclair State University, and he's a representative from FAFSA. So I hope that you guys are ready to take some notes. Thank you.
We'll wait till we hear what I say first. So I'm happy to be here tonight. I do a lot of these programs and I enjoy it. And I've been in the business a very long time. I started my financial aid career in 1979. Worked at 5 schools. Montclair now for 14 years. The other 4 were all private universities. So when I do these programs, I try to give you an overview of how financial aid works, because it works a little differently with different types of schools. Also, this coming year, so the 24-25 academic year, if your parents are seniors, that's going to be the kids' freshman year. The changes that are taking place in the federal financial aid processing are the most dramatic I've seen in my entire career. So they've made some major changes. Because of those changes, the primary financial aid form that you'll be filling out, the FAFSA, which normally would be available on October 1st, is not yet available. And the federal government's only saying that it will be sometime in December. So I'm going to talk a little bit about that later and the implications of that. But anyway, I'm here tonight on behalf of HESA, the state agency, New Jersey Higher Education Student Assistance Authority. That is the state agency that administers all the New Jersey state financial aid programs. So basically, high schools reach out to them and they send a speaker like myself to do the program. And the presentation is going to be shared with you, right, Ray?
Yeah, so if you guys aren't taking notes or you'd rather just listen, this is going to be recorded and then sent to families.
So there are some lengthy links in here. You don't need to worry about writing them down. Also, at the very end of the presentation, I provide my email address, and I'm more than happy to take questions. If after tonight you have an issue with financial aid and you want to send an email to me, I'll be happy to get back to you, whether your kid's looking at Montclair or not. So what are we going to discuss tonight? What is financial aid? How is eligibility determined? What is the student aid index? That's one of the new things that's going to happen in 24-25. The index that the federal government has always used my entire career was expected family contribution, or EFC. So they've done away with that. They're renaming it student aid index. The student aid index is intended to loosely represent what the system thinks the family is capable of paying for college themselves. We're going to talk about the types and sources of financial aid packaging, which refers to how colleges bundle together different sources of financial assistance into a financial aid offer to the student. Comparing offers, once you have offers from multiple schools, how to evaluate them. Special circumstances, that refers to changes that might occur in the family's finances. So you're going to find out a little bit into the program that when you file the federal aid application for the 24-25 academic year, you're reporting income from 2022. So there's a gap in time, right? So special circumstances refers to situations where something's changed in the family's finances. The most typical example would be where a parent becomes unemployed. In circumstances like that, the student can go to the financial aid office at the school they're attending and request a review of their eligibility based on that new circumstance. So that can happen, the loss of employment as the example can happen at any point in time up to and into the spring semester of their freshman year. So it happens in March 2025, it's still not too late to go to the financial aid office and request a review. So keep that in the back of your minds. So we're going to talk about 2 forms, the FAFSA, which is the federal aid application, and the profile form, which is only used by certain schools. And as I said, there are major changes coming into the financial aid process for 24-25. So what is financial aid? Generally, it refers to any assistance the student receives from any source other than from their families. And the sources are the federal and state governments, the colleges, and private sources, and it comes in the form of grants, scholarships, loans, and student employment. So the free application for federal student aid, the FAFSA form, has to be filed each academic year. It is the student's application. The parents contribute information to the application, but the student is submitting the application. And again, it has to be filed each academic year. The FAFSA is used by every school in the country to determine federal student aid eligibility. And most schools in the country will also use it to award their own institutional funds that are need-based. The second form is the college profile form, college board profile form. So this would only be if you're looking at elite schools, highly selective private colleges. There's about 300 to 400 schools in the country that use the profile form. And it basically takes a much deeper dive into your finances. And these schools typically will meet full needs. They put a lot of their own institutional money out for needy students, so they want to get a good, clear picture of the family. So if you are looking at schools like that, you need to find out if they require this form. And if you're filing the profile form, you would be doing the FAFSA and the profile form, both forms. Verification, I'll talk about that a little bit later, but basically you might be asked to submit documents to the school or to the state, to HESA. Non-custodial parent really is not the right description of this any longer, but basically you're going to find out when you're into the program that if the parents are separated or divorced, the student is going to file the FAFSA with only one of the two parents. Traditionally, it was the parent with whom the student resided. The rules, one of the major changes for 24-25 is that the student is now asked to determine which of the two parents provided primary support. So that parent would be filling out the FAFSA with the student, whether the student lived with them or not. So the non-custodial reference is for those schools that use the profile form, those highly selective private colleges. They may ask for the other parent, the one that did not file the FAFSA with the student. They might ask the other parent for additional information. The key thing is to know what your school's requirements are and deadlines. Deadlines on financial aid are really important, so you don't want to ever miss a deadline in submitting forms or getting documents back to whoever's asking for them. Okay, back to the student aid index. So this is an index, it's a number, and it's calculated from a formula that will look at both the parents and the student, and will look at income and assets. And as I mentioned, it's used exclusively to determine federal eligibility at every school in the country. The schools that use that profile form profile will continue to produce an expected family contribution, but that's only used for the awarding of institutional funds. So if you get into Princeton, they're going to, I don't even know if they use a profile form, but let's say they do. If they require both forms, they're going to use the information on the supplemental form to determine how much of their own money they're going to give the student. But for federal aid, the student is still going to be awarded based on the FAFSA. And the College Board has a wonderful website. I used it quite a bit when I was looking for schools for my own kids. And they have an EFC calculator out there. It has not been updated to the SAI because the government hasn't released all the information about the formula for that yet. But it is a way for you to go in and play around if you want to ahead of filing your forms. You can plug in your information and it will give you an estimated expected family contribution, the index for the current year on the federal side, but it'll also give you an expected family contribution, an estimated one for those schools that use the profile form for institutional aid. So how's eligibility determined? So at the beginning of every financial aid award cycle, the colleges have to determine what the cost of attendance is going to be for the student. The cost of attendance is intended to represent the full cost for that student to attend that school for that year. So cost of attendance figures vary from school to school quite a bit, even within schools. Montclair State's a public institution, so we have cost of attendance, we call them budgets. Cost of attendance budgets for in-state students, out-of-state students, resident students, commuting students, and independent students. So we have a lot of different budgets. But if you're comparing the cost of attendance of a private college, the cost of attendance is going to be typically much higher than a public school because they have higher tuition charges. The second bullet refers to circumstances under which the school can make student-specific adjustments to the cost of attendance. So a couple of the examples here are study abroad and disability. Study abroad would be, if the student goes to a study abroad program for a semester or for a year, the school is going to calculate a new cost of attendance for that student, reflective of what the costs are for that program. The schools that use the profile form, again, they calculate their own index. The formulas between that and the federal are very different. And need is very simple. Cost of attendance less the student aid index equals need. And here's a little more detail on the cost of attendance, things that are included within it. And again, there's at the bottom, it refers to some circumstances that might be student specific. All right, sources and types of aid. Sources of aid, the colleges and universities themselves, the federal government, the state of New Jersey, outside organizations, local organizations. Types of financial aid, again, grants, scholarships, employment, and loans. And the column over to the right reflects some of the factors that a school may take into account in deciding how much of their own money they're going to offer to the student. So obviously academics is first and foremost. Athletic ability only applies to students who are, in terms of getting an athletic scholarship, to students who attend a NCAA Division I or Division II school. Division III schools do not offer scholarships, nor are we permitted to provide any preference to the athlete. And most colleges in the country are Division III. The SATs or ACT scores could be a factor. Geographic diversity. My son went to college in Ohio years ago, and I think it probably helped him get a scholarship because most schools like to get some geographic diversity. He went to a public college in Ohio that had about maybe 10% of out-of-state students, so I think that helped him out. The rigor of the program the student's taking is important. AP courses, honors courses. Legacy refers to when a student goes to the college that their parent graduated from. And this is really more in line with more of the elite schools. In fact, there's been some controversy in the news recently about this, that it's not fair, because it's typically the rich folks who go to those schools and then their kids get to go. But anyway, and some of them are dropping it, but that's what that's in reference to. The students' activities, talents, gender and ethnicity. My daughter went to a college that was 2/3 male, so that probably benefited her in terms of the financial aid. In the high school you attend and the school, sometimes the class rank could be a factor. All right, so grants are a form of what we call gift aid. It's free money. It does not have to be repaid. The word grant usually suggests that it's a need-based program. Scholarships are another form of gift aid. Again, it doesn't have to be repaid, and scholarships are typically awarded on some kind of merit, academic, artistic, athletic, or otherwise. Loans are loans. I'm going to get into some detail on the loans. They must be repaid. And there are federal loans, there are privately financed loans. The federal loans, you're going to see the rates are pretty much fixed, or the privately financed loans, the rates are all over the map in terms of the creditworthiness of the applicant. And needless to say, you should borrow wisely. Don't borrow unless you have to. And is it a good investment for the student to borrow? If I'm asked that question, my answer is that statistically, someone who achieves a bachelor's degree over their lifetime is going to earn more than $1 million on average than the average person who doesn't have a high school diploma, a college degree rather. So from that perspective, I think it's a good investment. And then finally, student employment. So student employment is a job on campus. Like any other job, the student has to work the hours, they submit a timesheet, they get paid. So if you get a financial aid offer from a school that includes all these things, the grants and the scholarships and the loan can get applied towards the bill. The offer of student employment cannot, because the student has to earn the money as they go. All right, federal aid programs for the current academic year, 23-24. The federal government is by far the largest provider of financial assistance for college. Most federal aid is awarded on the basis of need. And I mentioned earlier, students have to file the FAFSA each year to be considered for aid. The largest grant program in the country is the federal Pell Grant. The maximum award this year was $73.95. That's for a student who has a 0 expected family contribution. And then as the EFC goes up, the amount of Pell declines until you get to that EFC of $66.56. Federal Stafford loan is a student loan. I'm going to talk about that in some detail. Federal Plus loan is a parent loan. The parent is the borrower, parent loan for undergraduate students. And then finally, there's two what we call campus-based programs. SEOG is a grant program. Federal Work Study is a jobs program. So the government gives a certain amount of money to the schools, and then we in turn award it to the students. Typically it goes to high-need students. All right, federal Stafford loans. If you file the FAFSA, the student files a FAFSA, at a minimum, they're going to get offered a federal Stafford loan, whether they show need or not. The column in the middle shows what dependent students are permitted to borrow each academic year. So at the freshman level, it's $5,500, sophomore year level, $65,000, junior and senior level, $75,000, and the cumulative limit for an undergraduate student is $31,000. You see below those numbers, in parentheses, a different number. So a portion of the loan each year, a portion, may be in the form of a subsidized loan. So if the student demonstrates need as a freshman, they'll be offered $5,500, and of that $5,500, $3,500 may be in the form of a subsidized loan. So that basically means that the interest is paid by the government for the period of time the student is enrolled in school, and then until they cease to be at least a half-time student, then there's a 6-month grace period, and then the interest will start on that loan. So it's interest-free while they're in school. If the student doesn't demonstrate need, they'll still get offered $5,500, but it will all be unsubsidized. And as that word implies, the interest is not subsidized. It does accumulate while they're in school. The students are not required to make any payments while they're a student. And the interest rate is a fixed rate, which is set each summer. So the rate for the 24-25 academic year will be set in July of 24. But for the current year, it's 5.5% fixed, which is the highest it's been in a very long time, and that coincides with the interest rates going up and everything else in the last couple of years. So hopefully it comes down before next year. And then the government charges a little over 1% of an origination fee, and they deduct that from the proceeds of the loan. The column over to the right reflects amounts that independent students can borrow, and the amounts are higher, as you can see, although the amount of subsidized loans are the same. And so independent students, so the student is the one who's filling out the FAFSA, they start the form, they answer a series of questions that will determine whether they are dependent, meaning dependent on their parents, or independent. You're all parents of dependent students, I'm assuming. So your kids will be looking at that column in the middle, but just so you understand, the most common circumstances under which a student would be independent would be if they're over the age of 23, if they're married, if they have a dependent that they themselves are supporting, or if they're a veteran of the armed forces. Under those circumstances, they're considered to be independent. We also have some students of traditional college age, 18 to 21, who qualify to be independent, but that's usually a pretty extreme situation in their life. I mean, they're in foster care or guardianship, things like that. All right, net price calculator. Regulations require all schools to have somewhere a net price calculator. What this is designed to do is to enable prospective students to go and plug in some numbers and get some idea of what they might get in financial aid from that school. The regulations require schools to have a net price calculator. They don't require them to have a good one. So some of them are not that valuable. If they decide to go on the cheap and use one of the free ones, it's not that robust. So what you get out of this really is going to depend on the school. At Montclair, we, like a lot of schools, use an outside company to do it for us. And the reason for that is primarily for us is that the largest individual award of money that a student might receive at a public institution in New Jersey is from the state, the state's grant program. So our net price calculator, when the student goes in to complete it, it links lifetime to HESA, state agency, which will come back with an estimated grant, so the student has an idea of what they might receive for state funding. So we think it's important to do that. So again, when you go into this, just keep in mind that some of them are good and some of them are not so good. All right, this is a slide. I'm going to go through each of these individually in subsequent slides, but this is a list of all the grant programs sponsored by the state of New Jersey, by HESA. The one thing that is common about all of these programs is that a student who qualifies for New Jersey's grants can only receive the funds that they go to college in New Jersey. They cannot go out of state. All right, so if your kid qualifies for the state grant and they're looking at out-of-state schools, they're going to leave the money on the table. All right, so for state purposes, the students must file the FAFSA. If the student is what's called a New Jersey Dreamer, they don't file the FAFSA, they file a state form called the New Jersey Alternative Financial Aid Application. And New Jersey Dreamers, really quickly, are undocumented students who attend a New Jersey high school for at least 3 years, graduate from a New Jersey high school, and both they and their parents reside in New Jersey. They can qualify to be a Dreamer and are eligible for state programs. Otherwise, to file the FAFSA, you would be a U.S. citizen or what's called an eligible non-citizen. Eligible non-citizen most typically would be someone who has permanent residency in the United States, a so-called green card. They and citizens would file the FAFSA. And as I mentioned earlier, to get any kind of grant assistance from the state, you have to go to school in New Jersey. Most programs require that the student be full-time. And the state has some deadlines, and I'll mention this a couple of times. So if your kid goes to a New Jersey school next fall and they get the state grant, the tuition aid grant, the deadline to file the FAFSA for their sophomore year is April 15th of their freshman year. So it'll be April 15th, 2025. That's a hard deadline. If you miss the deadline, then you don't get the grant in the fall. You might not get it in the spring if you don't get around to doing it. So I would encourage you, if you're in that situation, to mark your calendar and make sure around Christmas time next year, everybody's home, decide to do the form at that point and get it done so you don't miss any deadlines. All right, the Tuition Aid Grant Program, or TAG. A few weeks ago I saw an article that ranked all 50 states in terms of the amount of financial assistance provided for higher education within the state. New Jersey was ranked second in the nation. The Tuition Aid Grant Program is an incredibly generous program. The maximum award this year for a student attending a private college in New Jersey was over $14,000. The maximum grant at Montclair State this year was $10,900, and our tuition is only $14 and change, so it covered most. Now that's a student with maximum eligibility. To be eligible, I mentioned before, you have to be a U.S. citizen, eligible non-citizen, or qualify as a New Jersey Dreamer. You have to attend a New Jersey school and meet those deadlines, and it is a part-time program for TAG, but it's only available at the county colleges. Summer TAG. So for the first time ever, last summer, the state had money, and so they made TAG available in the summer. So students who were able to get a TAG award in the fall and spring could get a third one in the summer. It was tremendously beneficial to students, enabled them to pick up additional credits in the summer, get closer to graduating. So it was a good deal. It's a year-to-year thing. We believe it's going to be available next summer, but I'm not sure what will be the case in '25. EOF, Educational Opportunity Fund. This is for students who are educationally and economically disadvantaged. So a student who feels that are in that category would ask the admissions office at the college they're applying to for consideration for EOF, and then they would be vetted for eligibility. There is some additional grant money available, as you can see, but really the primary benefit to this program is that there's a dedicated group of counselors who work just with the EOF students. They do a wonderful job getting them through to their degree. This program does not apply to you folks because it's only for pretty much the cities, the people who live in the larger cities. All right, NJ Stars. So if the student is in the top 15% of the class, of their class, at the end of either the junior year or the senior year, they qualify for NJ Stars. And I know a lot of times the high schools do not publicize class rank, but the guidance department would inform students who are within the top 15% that they are eligible, so they'll know that they are. So there's two components to STARS. The first one is NJ Stars, and this is at the community college. So basically the student who qualifies based on being in the top 15% of the class can attend community college tuition free and get their associate's degree. And when they complete the associate's degree, they can transfer to any four-year public or private college in New Jersey and receive a scholarship in their last 2 years, $2,500 each year. And there are some academic requirements, as you can see. And there is no income cutoff for NJ Stars, but for NJ Stars 2, the family income has to be, the parent's income has to be below $250,000. Governor's Industry Vocation Scholarship for women and minority students who are planning to study in construction-related fields. All right, the Community College Opportunity Grant. This is another way for a student to get benefits to go to community college. This one is linked to the family's income. So the AGI is adjusted gross income. That refers to the parents for a dependent student, and it would refer to the calendar year that's applicable to that FAFSA. So if you're filing a FAFSA for 24-25, it'll be based on 2022. So if the parents' adjusted gross income is between $0 and $65,000, the student can attend community college tuition free. And as you see, there's 2 additional tiers going up to $100,000 where there's some economic benefit, less than full, but some benefit. The Garden State Guarantee Program was created a couple of years ago to piggyback on the community college program. It's pretty much the same deal in terms of the income, as you see. So if the parents' adjusted gross income is between $0 and $65,000, the student will qualify for free tuition at the 4-year institutions, public institutions. It is a last dollar program, meaning that if you're eligible for Tier 1, if the student's receiving a Pell Grant or a tuition aid grant, those are counted first, and the Garden State Guarantee kicks in whatever's left, basically to cover the remaining tuition. And again, there's Tiers 2 and 3 that provide additional benefits up to a family income of $100,000. 3+1 programs pertains to some 2-year public institutions and some 4-year public institutions who've decided to participate. And basically what happens here is the student can attend the community college for 3 years instead of 2, and then transfer to the 4-year institution and only do 1 year at that school and get their bachelor's degree. So the benefit to the student is they can save some money by going to community college for a 3rd year. All right, so this slide is about loans, and there's some common things about this slide. One is that these loans, unlike the Stafford loan that I talked about earlier, these loans require that there be someone who is creditworthy on the note. So it could be a parent taking out the loan on their own, or it could be the student as a borrower with another creditworthy person as a cosigner. The other thing that's common to all these programs is that you can borrow up to the full cost of attendance, less the financial aid the student is receiving. So you can borrow the full boat. The first program is sponsored by HESA, the state agency. It's the NJ Class Loan Program. They've made some improvements to this loan program over the last few years, and it's really a good, it's a solid program. As you see, their rates are all fixed depending on which repayment option you choose. And the nice thing about this program is that if you qualify, if you meet the qualifications based on the other underwriting, these are the rates you get. So whereas with the private educational loans, 3rd bullet point there, those private lenders will offer different rates to different people, like you'd run into if you're buying a car or getting a mortgage, okay? The second one, the bullet in the middle there, Federal Plus Loan, I mentioned that earlier. The current year rates are not that great, in my opinion, 8% fixed with a whopping 4% origination fee. So it's arguably the least attractive loan out there in the private loan world from a benefit standpoint. However, it's probably the one that's easiest to qualify for from an underwriting standpoint. So if there's concern about having credit issues, your best shot at being approved might be with a Federal Plus Loan. The other thing I'll mention about Federal Plus Loan is if the parent applies for the Federal Plus Loan and they're denied for credit reasons, the student can receive additional unsubsidized federal Stafford loan funds. So we can give them $4,000 more in the freshman and sophomore years and $5,000 more in the junior and senior years. Private education loans, that's in reference to private loans to student loan companies and banks that make loans for education. There's a growing number of them that do this. Many schools, including mine, use a service called Elm Select, Elm like the tree, Select. And it's a not-for-profit organization that works with the lenders in the schools to help display information. So if you were to go to Elm Select and choose Montclair State, you would see the lenders that our families have used the last 3 years. We call it a historical list. We don't recommend any lenders over any others. But given the size of our school and how much borrowing happens, you'll see all the major players in this business. So if you want to get in there and get an idea of what's out there, that's one way to do it. If you've got good credit, if you're going to be borrowing and you've got good credit, you're going to want to shop around. Other resources outside scholarships. campus administered payment plans. Most colleges offer a payment plan. What this does is it allows you to spread out what would be your out-of-pocket payments. So for example, and many of them allow up to 5 payments. So for example, your tuition would otherwise be due in full in August, let's say. If you sign up for the payment plan, you can spread it out throughout the fall semester and make your last payment in November. This is not a loan program. Most schools use an outside company to manage this for them, so there's a nominal fee to sign up for it. And again, it's just a way for you to spread out your out-of-pocket payments. Campus employment, I talked about that a little bit before. Let me just add another plug for that. In my experience, students who work on campus typically do better on average than students who don't. And the reason is that, first of all, they're making some money, which is good. But the second thing is that they basically form an attachment to the people they work with in the office, whether it's an academic department or an administrative department. And so if they run into problems and they need some assistance, they know somebody to go to who's going to know who to send them to, that kind of thing. So I strongly encourage it. Other types of campus employment, residential advisors, the RAs. These are students who are hired by the schools to look after a floor in a residence hall. And they usually get a free room out of it and a stipend. So it's a pretty good deal. This would not, of course, apply to freshmen, but it would be mostly available to upperclassmen, but it's a good way to save some money. Student ambassadors, tour guides, so if you go take a campus tour, you're going to be taken around campus, probably by a student, and they get paid to do that. Internships, if your kids, more and more academic programs are now requiring an internship, so if your kids have to do that, you're going to want them to look for ones that are paid. Some are paid and some are not. And finally, cooperative education. This is where a school has a program that allows a student to alternate periods of enrollment with relevant work. So let's say the student's an engineering student, they go to school in the fall, they work for an engineering firm in the spring, and they go back and forth. It takes them a little longer sometimes than 4 years to graduate, but they make some money while they're going through school, and perhaps more importantly, they're getting relevant experience for a career. It might actually lead to a job offer when they finish school. So there are some schools out there that have very robust co-op programs, so if that is something you're interested in, go out and Google it and see what you can find. All right, other resources, the high school guidance office, of course, the school's website. So if you're narrowing down the list of schools you're looking at, you should be spending time right now poring over the financial aid information on their website, admissions financial aid information. You need to become familiar with what's offered, and also deadlines, I mentioned that before. The local libraries, local businesses, civic organizations, and then there's a lot of websites out there that provide a lot of good information. The one you see, third bullet from the bottom, FastWeb, is one of many websites that are out there that are free. That's an important word, they're free to use for students to look for scholarships. So basically, a student goes into this website, they provide a bunch of information about themselves, their academic interests, a whole host of things, religion, their father's union, whatever it might be. And then the website will produce a list of scholarships that kind of match up with the student. So over the years, I've seen some students be tremendously successful doing this, but it does take some effort. And sometimes they might have to do like an essay or something like that. And now is the time, if your kids are seniors, now is the time they should be doing it, because the deadline for applying for a lot of these scholarships will come up pretty quickly. Okay, financial aid packaging. So the student has to be admitted to the college before they can get a financial aid offer. So if the school has the financial aid form, the FAFSA, and the student's been admitted, the school's going to put together, traditionally we call it an award, financial aid award, and all of a sudden that came out of vogue. They don't want us to do that anymore, so we call it an offer or something like that. But they're going to communicate, the student's going to receive an offer from the School of Financial Aid. So how does the financial aid office put the funds together? We start out with what I refer to as entitlement programs. So if the student qualifies for the Pell Grant and the tuition aid grant, we would start out with that. And again, those grants, eligibility is determined not by the school, but by the agencies that sponsor those programs. And then most likely the federal staff loan will be included. If it's a needy student, they might get some of this additional federal money I mentioned earlier. And finally, and perhaps most importantly, particularly at the private colleges institutional aid, money from the college. All right, so you get all the financial aid offers from these schools, and then you're starting to evaluate them. You really need to have a clear understanding of what's been offered and why it's been offered. And very importantly, what the renewability requirements are for what you're receiving. So if it's a need-based grant, you're going to want to ask the school if you anticipate that your need might go up or down in subsequent years. You're going to want to know, are they going to make modifications to what they've offered, or is this a fixed amount for 4 years? If it's a merit-based award, a lot of times merit scholarships have an academic requirement for retention. So it might be like a 3.0, for example, a B average. So if you make a decision to send your kid to a school because they got a sizable merit scholarship from the school, you should have some level of comfort that they're going to perform at the academic level necessary to retain it. Because a lot of times if they don't make the grade, they lose the scholarship, and then you're facing a difficult situation. Differential preferential aid packaging. This is mostly a private school thing, but schools admit a pool of students, and at one end of the spectrum are the students that they really, really, really want to come, and the other end of the spectrum are the students who just barely got in. So you could have two students with identical need at the same school who get two very different financial aid offers from the school. The one at the high end of the spectrum might get a whole lot more in the way of gift aid than the one at the other end. Most colleges do not have the resources to meet full need. So a lot of times there's what we call a need gap. So that means that the cost of attendance, less the student aid index, less the aid the student's receiving, and then there's a gap at the bottom that you as a family have to figure out how you're going to cover that. There are schools that meet full need. The schools that use the profile form that I talked about earlier, a lot of them meet full need. So if the student's got the academic digs to get into one of those schools and they're a needy student, they can go because the school will make the funds available. But that's the exception, not the rule. And the other thing about schools like that is most typically they don't have much, if anything, in the way of merit money. So if you get into Yale and they think you can pay the full price, you're going to pay the full price no matter how bright your kid is, okay? So what is the bottom line? You have to do some math. You get these financial aid offers from the colleges, and you have to do some math. Direct costs, calculate the direct costs, what you're going to pay to the school, subtract the gift aid, the grants and the scholarship, subtract the student loan, Stafford loan if you're going to take it. What's left is your out of pocket. So you have to drill down to that number to do a fair comparison of all the schools. Because some of them are not going to make it so easy for you to figure that out. And like, for example, I work at a public institution. I oftentimes will hear from a parent of a prospective student complaining that we didn't give their kid a scholarship. And then they'll say, oh, I got $10,000 from this other school. And invariably, the other school is a private school that costs more than $10,000 more than Montclair. So it's still cheaper to come to Montclair without the scholarship. So in order to evaluate the schools from a financial standpoint, you need to do the math, as I said. So difficult decisions. So let's say your kid applies to 6 schools. 2 of them are reach schools, 2 of them are in their groove, 2 of them are safety schools. They get into all 6 schools. Where are they going to want to go? They're going to want to go to that reach school, right? But the irony for you might be that that school is the one that's going to cost you the most. So I strongly encourage parents to be involved in the schools that their kids are looking at. Because there's a lot of peer pressure in the schools. You know, they're walking the hallway, where are you applying, where are you applying? Over the years, I've seen many times the oldest child, the parents are really kind of disengaged from the whole thing. The oldest child goes out and applies to all these schools, and they get into their dream school, an expensive private school, and then and only then do the parents find out what it's going to cost. And then they're faced with a dilemma, you know, do I let them go? And a lot of times they don't want to say no, and they bite the bullet, and they send them, and then they struggle to pay for it. The other thing is, in those situations, if there's younger children in the family that are going to come up and go to college later on, oftentimes if the parents allow the oldest one to go to that expensive school and they struggle to pay for it, when the younger ones come along, they don't get so many choices. So you should think of paying for college as a family thing. You have multiple children, you want to be fair to all the children, right? But you can do a lot of the research yourself. So if you'll indulge me, I'll tell you stories about my own 2 kids. So I did the math. I knew that we were not going to demonstrate need. We were not going to get need-based aid. My oldest one, my daughter, was a great student. Honors courses, AP courses, GPA above 4.0, weighted average. She wanted to study art, and she did not. Her requirements initially were that she didn't want to go more than 2 hours away from home. She didn't want to go to school in a big city. And she didn't want to go to an art school. She wanted to go to a school that had multiple majors, so she wasn't just with art students. So I went looking for a school that would serve her well and me financially. And so I wasn't finding much initially, so I had to expand the radius. And she ended up going to Rochester Institute of Technology in Western New York, which is known as an engineering school, but they have an excellent art program. And that's what I mentioned earlier, the 2/3 male. That's why, it's an engineering school. But anyway, I knew from their website that she would get a sizable merit scholarship based on her academic credentials, which she did. And ended up costing us about the same as it would have been had we sent her to a public college in New Jersey. So that was a fair deal, we thought, for a private school. She did very well there. If you think about other options that are similar, that are, let's say, a more prestigious school that's similar to RIT would be Carnegie Mellon, right? Carnegie Mellon's an engineering school. At the time, I knew the financial aid director there. I called her and I said, do you have much merit aid there? She said, not much. So it would have cost, I estimated, between $80,000 and $100,000 more over 4 years had she gone to Carnegie Mellon. And I don't think it was, it's a wonderful school, but I don't think it was worth the difference in price, at least not for my wife and me. So my daughter, she graduated, she went on and got a master's degree, and she's making a very good living right now as an artist. She does the visual reality goggles thing, she does the whole thing, soup to nuts. So she's doing very well. Her younger brother, 3 years younger, was just as smart as his sister, but he didn't do any work in high school. He was an athlete, not that that's an excuse, but he decided that he didn't have to do homework and things like that, so he drove me completely out of my mind. He ended up with a GPA closer to a 3.0, and that with A's in gym. So he wanted to go to a Division I school for the atmosphere, and so he started out with one of his best friends, got in early decision at University of Michigan. He goes, maybe I'll go to Michigan. I said, maybe you won't go to Michigan because you're not going to get into Michigan. Then he said, well, how about, Ohio State, Penn State, UConn? I said, no, they're out. I said, you might get in, but they're not going to give you any money. And as not a state student, it was going to be like 40 grand back then to send him. So I went looking for schools that met his requirements and mine. So I looked for schools where I knew he would get some money because he did well in his SATs. He's a bright kid, he did well in his SATs, and so I found schools that would give him merit scholarships based on the SATs and that minimal 3.0 GPA. So we did a little field trip. We went to West Virginia, we went to University of Louisville, and then we went to Ohio University, which is where he ended up going. Not Ohio State, Ohio U. It's a public institution. And the best part of the story, so he got a scholarship. It actually cost less to send him there than it would have been to send him to a public college in New Jersey, because they're cheaper to start with, and they covered the in-state, out-of-state gap. But the best part of the story is he became a student once he got there, finally, and he graduated magna cum laude with a degree in finance and worked in Nashville for 5 years, and he just came home and started as a full-time MBA student at NYU. So he did well. So the good part of the story is that if kids are goof-offs, there's some hope. But I tell these stories because you can do the same kind of research. I mean, you can figure out what the likelihood is of getting aid at different types of schools, and you need to decide as parents how much you think you're capable of paying, how much you're willing to pay, how much you're willing to borrow if it's going to come to that. You should make those decisions before the kids get too heavily involved in the application process, so that there's no surprises for you and there's no surprises for them, and just work together to find something that works for both of you. Okay, appeals. So you get the financial aid offers from the schools and you want more money. Can you ask for more money? Can you appeal for more money? Yes, you can. However, if you do, you need to have an understanding of why you're asking for the money. What's the basis of the ask? So if it's need-based, if you think it's because you need more money, you should be able to figure out what they think your need is, right? Because they know what the cost of attendance is, that student aid index, they know what aid they've offered. Is there a big gap or a small gap at the end? Your chances are obviously better if there's a big gap. If it's a merit-based approach, you need to know where your kid fits in at that school. Are they going to be a star academically, or are they going to be an average student? So again, some schools don't entertain appeals at all. And whether you're successful with a school could depend on the school and also the year in question. Years ago, I worked at a private college for a couple of years. My boss was the dean of admissions. And most private colleges are tuition dependent. They have to get that freshman class to pay the bills. So they know how many deposits they have historically on January 30th, on February 30th. So they have some idea of whether they're on a path to getting the class that they want to get. So the year that I was there, the first year I was there, the deposits were coming in pretty well, and he was comfortable with where he's going to get, where he's going to be on May 1st. And so we were pretty stingy with the appeals. The second year I was there, just the opposite situation. He was really nervous about getting the class. The numbers weren't where he wanted them to be. So we were very generous that year with the appeals. So same school, 2 different years, 2 different outcomes. You're not going to know whether they're struggling to get the class. They're not going to tell you that. So if you're going to make an appeal, make sure you have a basis for it, and you might want to wait later in the cycle as opposed to earlier, because as you get closer to May 1st, they get more nervous if they're not going to get their class. And if you do make the appeal, you're not going in to negotiate. You're not, like you're buying a used car or something. You can discuss. My suggestion would be you go in and say, look, my kid really wants to go to this school. We're struggling with the decision because we have other options that are less expensive. Is there something you can do? Either they will or they won't. Okay, other things to think about. Treatment of outside scholarships. So let's say your kid gets a sizable local scholarship, $5,000. So you're thinking, this is great. We get the financial aid offer, we pay the deposit on May 1st, we get the bill in July, and they're going to apply all that financial aid for the fall, and then you're going to add that $5,000 payment from that scholarship. That may not be how it plays out. And this is mostly, again, a private school thing. Some schools will adjust the aid that they've offered to the student when the student brings in a scholarship from the outside. And you wouldn't necessarily know that until well after May 1st. So if you have a sizable scholarship and you've been offered need-based aid from the school, you might want to call them ahead of time before you deposit and find out if they're going to make an adjustment. They call it displacement. They basically displace the funding. Now, if you get into one of those elite schools that have met full need, they're going to have to make an adjustment, right? Because they've already met full need. So they're not the bad guy in that instance. But for everyone else that hasn't met full need, the ones that left a gap, if they're being fair to you, they'll let you use that money to fill the gap as opposed to reducing their own scholarship grant. Anyway, scholarship scams. If someone wants to charge you a fee to apply for a scholarship, I'd stay clear of it. Consultants. This is where families hire someone who is supposedly an expert in financial aid to help them with the financial aid process. And sometimes they charge a lot of money. In my opinion, you don't have to pay someone to help you complete the forms. They're not that difficult to do. Most of the consultants will approach it from the perspective of saying to you, we'll make you look poorer if you work with us. So how do they do that? They do that mostly through the manipulation of assets. So I'm going to talk a little bit about assets. Again, we don't have the SAI formula yet, but the EFC formula is public information, by the way. If you want to Google federal EFC formula, you can find it. But basically, in the federal need analysis system, the assessment of assets is different if the money is the student's money or the parent's money. So if the money is in the student's name, currently 20% of whatever the student reports as their own assets gets added to that index, the SAI, next year. If the same amount of money is in the parent's name, the contribution is in the range of 5 to 6%. So the moral of the story is you're better off not having money in the kid's name. You'd rather have it in the parent's name. And so that's the angle that the consultants will take with this. So while I'm talking about assets, I'll talk a little bit more about assets. So The assets that are reported on the FAFSA are what you have on the day you file the FAFSA. So there's some notable assets that are not counted, that are excluded. All right, so one would be any retirement accounts you have. That money is not reported on the FAFSA, 401k, IRAs, that sort of thing. The other major asset that is not reported on the FAFSA is the equity in your principal residence, the home. If you own a home and you live in the home, you have equity in that home, it's not reported on the FAFSA. So what is reported, basically everything else, savings accounts, checking accounts, investments that are not part of retirement, and properties that you might have, like a rental property or a vacation home. If there's equity in those properties, that gets reported on the FAFSA. And again, it's as of the day you file the form. So I always say, you know, give this example that a family has $50,000 in cash, and the day before they file the FAFSA, they go out and buy a car for cash. It disappears. They don't have it the day they file the FAFSA. But if they bought the car the day after they filed the FAFSA, you can't go back in and change the number on the FAFSA. So what you report on the FAFSA remains in place. So that's basically how the assets work. Okay, these are the splash pages for the form. The upper left corner is for the FAFSA, the purple one is for profile form, and the blue one is for the New Jersey Dreamers. Just two quick slides on the CSS profile. Again, this is a form that's only used by certain schools. So if you're looking at the elite, highly selective colleges, they may require this form, and if they do, you need to file it. They were not impacted the way the federal government was with all the changes in the FAFSA. So their profile form for 24-25 became available last month on a traditional calendar. And this is a fee-based form unless the family income is $100,000 or under $100,000. And they have their own customer service. And I talked very early on about the non-custodial parents. So if the student files the profile with one parent, many of the schools that require the profile form will ask the other parent, you know, in the case of separation divorce, they'll ask the other parent to complete a form. So back to the FAFSA, they're referring to it as a better FAFSA. That remains to be seen. They're calling it simplification. Not maybe simple for you, but it's not going to be simple for me. But anyway, the form itself is going to be substantially shorter than the traditional form. The current FAFSA form is over 100 questions. The form for 24-25 is going to be about 50, something like that. You file the form on this website, studenta.gov, and again, it's always a prior year, we call it prior year, so there's a 2-year look back for income. They've also introduced this new description called contributors. So a contributor is anyone who's completing information on the form. It'll be the student and it'll be the parent. Another major change is that for 24-25, well, let me back up. For the last, I don't know, 6, 7, 8 years, there's been an option when you file the FAFSA to link to the Internal Revenue Service when you're filing the form and pull in information from the IRS. It was optional, you didn't have to do it. For the 24-25 academic year, technically it's still optional, but they will tell you that if you don't do it, you're not going to get any federal financial aid. So that kind of makes it not optional. So when you go in there as a contributor, you're going to authorize this link. It's going to pull in the tax information from 2022. It's going to go into the FAFSA. You won't be able to see it while it's going. You won't be able to see it after it's there. They mask it all for security reasons. So the student and the parent, if the student filed a federal tax return in 2022, they'll be doing the same thing. We'll pull the information in from the IRS. So this is just a slide that talks about some of the changes. Some of them are good, some of them for you, and some of them not so much. So I talked about the first one, about linking to the IRS. Family size. So family size is a factor in the need analysis formula. And the assumption the feds are going to make is that the number of exemptions that come in on that tax return from the IRS, that's the household size. That may or may not be correct, because household size can includes the parents, the student, other children in the home that the parents are still supporting. It can also include someone else, like a grandparent that's living in the home, as long as the parents are providing more than half support. So you're going to want your household size to be as big a number as it can be. So there is still a question on the form that in the student section where they're going to answer what the household size is. So that information is going to be available, but the feds are going to default, if you will, to the exemptions. And I've run into questions already with divorced parents, because sometimes they alternate who takes the exemption. You know, so if the one that's the one that's filing the FAFSA that year happens not to be the one that took the exemption on that tax year, they're not getting the accurate household size. So the student can put in their own number, and I'm not sure how that's going to play out at the other end, at the college's end, but it is something that the student can request a review for if the federal system is not reflecting an accurate number. All right, so parents, let's talk about parents a little bit. So if students' parents are married and they're living together in the home with the student, they're all providing information on the FAFSA. Now, if the parents filed their taxes as married filing jointly, then only one parent has to be a contributor on the form with the student. If the parents are married but filed filing separately, then both parents have to become contributors for the form. If the student's parents are separated or divorced, as I mentioned earlier, the student is going to be reporting information with only one of the parents, and it's going to be based on the parent that's who has provided primary support in the previous 12 months. That's a different way of doing it from what we've always done. This next one is a big one. Going back to the parents again, let me cover all the possibilities. So if the parents are separated or divorced and they're both still living in the same home, and it's not a two-family home, it's a single-family home, then regardless of the marital status, they both have to report information on the FAFSA. And if the parents were never married, but the biological parents were never married, but they're living in the same home with the student, they all report information on the FAFSA. Okay, the next one is a big one. So traditionally, the way the formula worked in calculating EFC was that it would calculate a parental contribution, and it would divide the parental contribution by the number of children in college. So if they had more than one in college, each student benefited from that number being divided by the number in college. They did away with that. So now families that have multiple children in college at the same time are not going to get a benefit in the need analysis formula. This could be a basis for some kind of an adjustment that the school could make. I talked earlier about those special circumstances. This could be a special circumstance that you've got multiple children in college and you want us to reconsider. And so schools are not sure how they're going to handle this yet. I'm not sure how we're going to do it at Montclair yet. But if a family, we have quintuplets that are, thankfully they're seniors, so they're not going to be impacted by this. But you do have families that have 2, sometimes 3 in college, and it makes a big difference. So we're going to see how this plays out. Another big change is that prior to 24-25, if there was a family-owned business, a small business that had and they owned more than 50% of the business, and they had fewer than 100 employees, they were not required to report business assets on the FAFSA. They've changed that now. So if you have a small business or a farm, you have to report whatever the assets are for the business on the FAFSA. They are now pulling in, they used to have a whole bunch of questions that pulled in information that was considered to be non-taxable income. So they've done away with those questions, and they're basically only pulling in as non-taxable income things that come off the tax return, like tax-exempt interest and the contributions you make to your retirement. Those will be counted, but so that's a benefit to families. And in 529 plans, the college saving plans, this is another positive change. So the way this works is that if the parents have established multiple 529 plans for multiple children, the way the rules read right now is that they would be required to add all those 529 plans together and report that on the FAFSA as a parental asset, not a student asset, it's a parental asset. So the change that is taking place for next year is that from now on, you're only reporting the 529 plan that's in the name of the student who's filing the FAFSA. So their siblings, money that might be in their name would not get reported. And again, it's a parental asset. And while we're talking about 529 plans, if the 529 plan was established by someone other than a parent, let's say it's a grandparent, it doesn't get reported on the FAFSA at all. So that's the good news. The bad news is that when that money is made available to the student in the calendar year in which that occurs, that's considered non-taxable income to the student for any FAFSA they might file in the future that is looking at that calendar year. So you follow what I'm saying? So it may be beneficial if it's a grandparent that's going to provide the money that you wait until the student's a junior or senior because of the 2-year look back. You might avoid being penalized in that way. And then finally, I talked earlier about who is an independent student, and I said that there are some 18 to 21-year-old students who qualify as independent, right? Because they're like in foster care and that sort of thing. Traditionally, those students were not able to complete a FAFSA because when they went in to file the FAFSA, they answered all the dependency questions in a way that made them dependent, and if they didn't provide parental information, the form would not get fully processed. So they've now changed it so that students in this circumstance are permitted to file the form and it gets completed. It gets in a form in which the school could pay them financial aid. However, in those instances, the school is still going to have to vet it. So the student, what used to happen before is the student had to go to the financial aid office at the school before they filed the FAFSA and persuade the financial aid office that they should be considered independent. And then the financial aid office will help them file the form. So the new deal is the student complete the form without intervention by the school, but the school still has to review the validity of the student claiming to be independent. All right, okay, so before you file, let me see. Okay, the second line there, Federal Student ID, FSA ID, all right? So before you file the FAFSA, both the student and one parent have to establish a federal FSA ID, and you do it on this website. So you can do this now. Since the FAFSA won't be here until next month sometime, you can get this out of the way now. So basically, it's a username and a password that you will use to file the FAFSA. And again, the student has their own, and if it's only one parent filling out the form with them, only one parent. If it's the married couple that filed separately, then they both have to do it. So they'll both have to have an FSA ID. You go to this website, you provide information about yourself, your date of birth, your social security number, and all that, and then the federal government will basically run it through the Social Security Administration to verify that you are who you say you are, and then they'll come back to you and confirm that the username and the password, the username that you chose, hold on a second, is not being used by someone else, right? So they'll let you know that you're good to go, then you have to respond to them either via text or email, and then it's a done deal. Yeah, question?
For the FSA ID, if you already have a student in school, is that
Yes,
one?
the parent's FSA ID is their ID, so they would use it for whatever FAFSAs they file for multiple children. It's the same ID.
Okay, thank you.
Okay. Let's see. All right. For undocumented students, they just came out some guidance. I haven't had a chance to review it on how a parent who doesn't have a social security number can get an FSA ID. But students, a lot of times a student who was born in the United States, a U.S. citizen, are eligible for federal aid, but their parents are undocumented. So they can still apply, they can still file the FAFSA, and the parents can still provide the information even though they don't have social security numbers. Those instructions have just come out, but I haven't reviewed them yet. All right, the tax information, I talked about this already. Basically, the information is transferred from the IRS while you're filling out the form. You have to consent to it. That's what the consent looks like. All right, so some general requirements for federal aid eligibility. The student has to have a valid social security number. They have to be planning to enroll in an eligible program at an eligible school. And again, for federal aid, they must be a U.S. citizen or an eligible non-citizen. And this is a list of things that, some of the components of the FAFSA that the student and the parents are going to have to provide. I'm not going to read them. But basically, I want you to be extremely careful when you're filling out the form. Don't make a silly mistake. Get the social security number right. Get the date of birth right. Make sure you know which part of the form you're in, whether it's the student section or the parent section. And as far as the name is concerned, it needs to match what's in the Social Security Administration. So you should pull out the Social Security card out of the closet where you have it stored and look at it and make sure that that's exactly how you present both your name and the student's name in the form. Because again, they send it to the Social Security Administration to do a database match to confirm that you are who you say you are, and that's how they confirm citizenship, by the way. So take your time and make sure you get it right. I talked about the family size already. Okay, so if the family is qualified for the third bullet down for one of these federal government programs, those are means-tested benefit programs, you're going to have a very short path with the FAFSA. You won't have to answer too many questions, and you automatically get maximum eligibility. The last bullet is important. So up until this year, students were limited to 10 schools on the FAFSA. And although I don't understand it, I know a lot of students these days are applying to more than 10 schools. So it creates a problem currently because the student has to put 10 on the original FAFSA, let it process, then go in and remove some and put the new ones in. They've increased it to 20, so hopefully 20 will be enough for most students. So you list the schools that the student's applying to. You don't wait for them to be admitted to file the FAFSA and send the information to the school. So if a student doesn't get admitted to that school, no harm, no foul. They're just not going to do anything with the information. At the end of the FAFSA process, you're going to get this form. It's a confirmation page. And the blue arrow is pointing to a box. That is giving the student the opportunity, if they wish, at this point in time. Sorry. Okay. All right. Oops. What happened? There. Nope. Okay, back to this. So a student, if they wish, can link to the HESA. The state agency has a student portal called NJFAMS. And the student can link from the FAFSA to HESA and create their own login to the student portal. They have to create a user ID and password to get into the state portal. So if you're looking at New Jersey schools, your kids are going to want to do this. And if you're tired of filling out forms at this point, you don't want to do it, that's fine too. Let the FAFSA get filed, wait a week or so, and then go directly into the HESA website to the NJFAMS page and then create the login there. All right, verification. I mentioned this very briefly at the very beginning. So the federal government selects certain students for federal verification. When that happens, the student is required to submit documents to the financial aid office at the college. It then becomes our job to determine if the information that was provided in the FAFSA was accurate. With everybody now transferring taxes from the IRS, it should be a much simpler process than we've ever had to deal with in the past. But there still will be some questions about household size and that sort of thing. Again, if it's federal verification, the student's dealing with the school financial aid office. They could also be selected for state verification by HESA, and in that case, you're dealing with HESA. So that's the importance of that, that student portal I mentioned earlier, is that the student would be able to upload documents to HESA through that portal. So you can be selected for federal verification or state verification or both. Now, the communication that goes to the student in all these, for both cases, is via email. Students have to read their email. All year long, summertime, Christmas time, all year long, they have to be reading your email because that's how they're going to hear from HESA and that's how they're going to hear from their own college. And if they don't read their emails, they could neglect to respond to requests for information, they could lose money. So we always have students who, when they get an initial award offer from us, it includes the tuition aid grant from the state. The state says they're eligible for a grant. But the state selects them for verification, and they start sending emails to the students. So come fall, October, November, around that time, if the student has ignored all 12 emails that they got from the state about this, then guess what happens? They cancel the grant. So it's really, really important that students read their emails and respond to them. I already talked about the Dreamers. This again is the NJFAMS student portal. There's a bunch of things the student can do on the portal. First of all, they can supply the documents I mentioned earlier from verification, but they can go in and apply for scholarships. If they did miss emails, all the emails are on the portal, so they can go back in and read every email that was sent to them from day one. The student, if they've applied to multiple New Jersey schools, can at some point go in and see the prospective TAG award, tuition aid grant, that they're going to get at each of the schools, New Jersey schools they have on the FAFSA. And finally, they can inform the state once they've made a decision where in fact they're going to be attending. So the process for financial aid, again, you don't wait to be admitted to file the financial aid forms. You file them at the same time you're applying for admission. You will hopefully get in a normal year, you'd start filing the form in October. This year it'll be December. The schools will get financial aid offers out to the student as soon as possible. So this year it'll probably be after January 1st at the earliest. And because of the late late availability of the FAFSA, the whole financial aid process is going to be very constrained. You're going to have less time to get things done. So you're still going to want to get the offer from every school you're admitted to prior to May 1st, when you have to make a decision about where you're going to go, and have time to evaluate them. But it's going to be less time than you've had in the past. So the student makes the deposit on May 1st and decides where they're going to go to school. Then sometime in late summer, you will get the bill, and then it'll become very real. All right, this is what used to be called a shopping sheet. Now it's called a federal college financing plan. The state of New Jersey passed a law a couple of years ago that mandates that all the schools in New Jersey use this exact format in communicating with students what they're being offered for financial aid. The purpose of this is to make it clear to the student what the costs are, what their out-of-pocket's going to be after any gift aid that's awarded, grants and scholarships. There's a subtotal that shows you what the cost is. Then they reference loans, but they don't put the loans in the math. But anyway, this is modeled similar to a federal shopping sheet that came out several years ago. But anyway, all the New Jersey schools are required now to use this exclusively. They're not supposed to have what they call a competing document on financial aid. And I think it's actually, I wasn't a big fan of this when it first came out, but I've actually come around on this because I do think it makes it simpler for the families to compare financial aid offers. You're not going to get this from the out-of-state schools. The out-of-state schools are still going to have their traditional financial aid offer letter, whatever they call it, and it's going to be formatted in a variety of ways. So that goes back to what I said earlier about doing the math. You have to really pour through these documents and make sure you understand what's there and what your out-of-pocket's going to be. All right, so there's customer service for the College Board, for the CSS profile. NJ Best, so this is New Jersey's version of the 529 plan. So if you're still in the savings mode, this is the one that's sponsored by HESA. And they've made some pretty good improvements to it in recent years, including some tax deductibility and scholarships. So if you're still saving, this is somewhere you could look, although every state in the country has a 529 plan, so there's others to look at. I have not checked this out personally, but they now apparently have pre-recorded webinars on the HESA website, and hopefully they'll have one about completing the FAFSA for 24-25, but you can go there for help. And the publications that were on the table when you walked in are all available online from HESA, so you can go in there and print them out if there's anything in there that you missed or want to see. And they have their customer service folks, their phone lines, they have websites for different aspects of what they do. And that's actually, this is the last slide, but I'll go back. And I'm more than happy, that's my email address. As I said at the beginning, you're welcome to send me emails after the fact. Yes?
I have a question going back to what you said about students' asset, like if a student has money in their hand that counts more advanced, so they have a job, that they.
Well, a job is different than assets. Assets are savings.
Okay, we were talking about.
No, I wasn't talking about job, but the income does count, but usually a student's, no, I don't.
We were talking assets.
Yeah, yeah. Any other general questions? Yes?
Do the schools usually post up the anticipated cost of attendance?
On the website, they should have information for the current year. Like when we do it at Montclair, we don't know what we're charging next year traditionally until July. So when we send out our financial aid offers, we're using current year information. Some schools will know much earlier what it's going to be, and they'll provide accurate information, but it should be on the website. In the back?
Hi, a lot of us in this area are self-employed,
I don't use the profile form myself at Montclair, so I'm not really familiar with that.
Okay.
But I would call the college board, though, they should be able to help.
Gotcha. And then you said like work study, when our kid says on the FAFSA that they're willing to do work study or they want to do work study, is it generally within their field of interest or are they like peeling potatoes and deciding?
So that question doesn't have a whole lot of import, honestly. It's a question, I mean, the word federal work study, that's the specific federal work study program, which you have to be needy, to qualify.
Right.
So, yeah, I have a friend whose kid is applying right now, and they're not going to demonstrate need. And they said, "How do you answer the question?" And it doesn't matter really how they answer the question because they're not going to get work study. But it could be an indicator that to the college that they would like to work on campus. So there's no harm in saying yes to that question. Yep.
When you talked about they get their package from the college and they get their scholarship or their grant, when they get if they get something from the high school or the town or something and they take some of it away, is that just for needs-based or merit-based too?
So the question is, if the kid gets a local scholarship, I mean, a lot of the kids graduating get $1,000 or something like that. I mean, most often that's not going to have an impact. The way the scholarships normally work, the outside scholarships, is the money gets sent to the school. So it'll go to the student accounts office typically, and the regulations require the schools, the financial aid office at the school, to be aware of that, and we have to count it as what's called a resource. So it does impact financial aid one way or another, because we're not allowed to allow a student, we can't allow a student to receive more financial aid than their cost of attendance, and we can't allow a student to receive need-based aid with government funds that exceeds their need. So the $1,000 scholarship, whatever, in most cases, is not going to have an impact on anything other than if it's a low need student, it could affect that balance of the Stafford loan that I talked about earlier. It might make more of the loan unsubsidized. I mean, in the worst case scenario, that's what would happen.
So it shouldn't affect like the merit base?
Not merit. Usually merit is unaffected by other aid, but again, it depends on the school, it depends on the dollars you're talking about. If the student has a very large merit scholarship, they might have some provisions for making adjustments. Yeah.
In regard to the merit scholarships, is that only based on high school transcripts, or are students allowed to apply for that throughout their 4 years of college?
So if it's a merit scholarship offered by the school, most merit scholarships are awarded to students coming in as freshmen, in my experience. And if you don't get it as a freshman, sometimes you don't get one subsequently. But there are also, like at Montclair State, we have like 400 scholarship funds that were established by donors over the decades. And so many of those scholarships are awarded to upperclassmen by the academic departments. So at the end of the student's freshman year, for example, they would have the opportunity to apply for scholarships for the sophomore year that are awarded by the faculty. But that's just my institution. So it really depends on the school in terms of what's available. But yeah, most merit money, though, is awarded to incoming freshmen. And also, if the student ends up transferring, which a lot of times happens, when they transfer to a school, usually there's not so much merit money for a transfer student compared to a freshman.
Okay, thank you.
I'd be happy to stick around afterwards if any of you have individual questions. But are there any more general questions? All right, I hope it helps. I always say that I always feel like I'm looking at deer in the headlights. Look, I'm finished with this.